Hello everyone. Welcome to the Stock Minds web channel. Alibaba Group, NYSE Baba, has long been a dominant force in e-commerce, cloud computing, and AI-driven digital services. The company's Q4 2025 earnings, ending March 2025, delivered good growth in revenue and earnings per share while having low valuation. In this video, we will dive into Alibaba recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Alibaba. Founded in 1999 by Jack Ma in Hangzhou, China, Alibaba has evolved from an e-commerce startup into a diversified tech conglomerate. Its core business units, Taobao and Tmall for domestic retail platforms, Alibaba Cloud, Cainiao Logistics, AliExpress and Lazada for international commerce, local services, and digital media and entertainment. With a global footprint, Alibaba continues investing in AI, cloud infrastructure, and consumer services, cementing its position among leading global tech players. Alibaba financial performance. Alibaba Group reported solid financial results for the fourth quarter of fiscal year 2025, which ended in March 2025. The company generated revenue of $32.57 billion, representing a 5.99% increase compared to $30.72 billion in the same quarter of 2024. Quarterly earnings per share, EPS, saw a remarkable surge to 71 cents, up 294.44% from 18 cents in Q4 2024, signaling strong profitability improvements. On a trailing 12-month TTM basis, total revenue reached $137.24 billion, up 5.29% from $130.34 billion a year earlier. Similarly, TTM EPS rose to $7.38, marking a 70.44% increase compared to $4.33 in the prior year. However, free cash flow per share, TTM, declined significantly to $4.55, down 44.65% from $8.22. Despite this, Alibaba maintained good profitability metrics with a gross profit margin of 39.95%, net profit margin of 13.06%, and a free cash flow margin of 1.3%. The company also demonstrated solid returns, reporting a return on assets of 7.21% and a return on equity of 12.97%, supported by a conservative debt-to-equity ratio of 0.22, highlighting financial strength and low leverage. Over the past 5 years, Alibaba's revenue has been growing at a 10.6% CAGR. Net income is down from its 2020 peak, but has been increasing steadily since then, while free cash flow has fluctuated. Alibaba Fiscal 2026 Financial Forecast. Looking ahead, analysts are optimistic about Alibaba's growth trajectory. Revenue for fiscal year 2026 is forecasted at $148.43 billion, a 7.37% increase from 2025's $138.24 billion. Additionally, non-GAAP EPS is projected to rise to $9.89, representing a 9.02% year-over-year growth from $9.08. Analysts have assigned a strong buy rating to the stock, with a consensus price target of $162.73, implying a potential upside of 3.52% from current levels. The highest analyst price target stands at $190.16, suggesting an upside potential of 56.08%, underscoring analyst confidence in Alibaba's undervaluation. Baba's stock price performance and valuation. Alibaba's stock has delivered strong performance over the past year, with the share price rising 53.6% to reach $121.88. Significantly outperforming the S&P 500's 12.5% gain during the same period. However, over a longer 5-year horizon, the stock remains down 44%, underperforming the S&P 500, which has risen 98.2% in that time. This long-term underperformance, largely due to Alibaba declining net profit from 2020. The stock also offers a modest dividend yield of 0.86%, which adds to total shareholder return. Despite its recent rally, Alibaba still trades at compelling valuation levels. The price-to-sales PS ratio on a trailing 12-month TTM basis stands at 2.08, with a forward PS of 1.86, indicating the market values its future sales conservatively. The company's non-GAAP price-to-earnings (PE) ratio is 13.41 on a TTM basis and 12.27 forward, suggesting the stock has low valuation. Additionally, the price-to-free cash flow (PFCF) ratio sits at 26.7. Based on FinChat data, if we look at the valuation over the past 5 years, the forward PS ratio is below the average. The forward PE is also below the average, while the PFCF is above the average. This shows that Alibaba is currently trading at a significantly lower valuation compared to the past 5 years, due to a decrease in net income from its 2020 level and slower growth. However, the current low valuation makes it attractive. Alibaba growth potential. Alibaba growth prospect remains robust, driven by several factors. 1. Stable domestic dominance. Alibaba's domestic e-commerce segment, encompassing Taobao and Tmall, reported a 9% year-over-year revenue increase to RMB 101.37 billion, $13.96 billion, in Q4 2025, with customer management revenue from marketing and merchant services rising 12% year-over-year. This growth was fueled by enhanced user experiences and effective monetization strategies. The 88 VIP membership base expanded to 49 million, achieving double-digit year-over-year growth. Alibaba's user-first approach, including advanced product recommendations and merchant-friendly tools like Quanzhentui, is driving engagement and transaction volumes. China's economic stimulus is expected to boost consumer spending, supporting a projected 5% year-over-year growth in the near term. Investments in instant commerce with rapid delivery services aim to meet convenience-driven demand, strengthening Alibaba's competitive edge against JD.com and Pinduoduo, potentially increasing market share in the dynamic e-commerce landscape. 2. Strong growth in international commerce. Alibaba's International Digital Commerce (AIDC) segment saw a 22% year-over-year increase to RMB 33.58 billion, $4.62 billion, in Q4 2025, propelled by strong performance in cross-border businesses like AliExpress. Losses significantly narrowed from RMB 7.1 billion, $990 million, to RMB 4.5 billion, $620 million, year-over-year, reflecting enhanced operational efficiency. AliExpress Choice's emphasis on curated products and faster shipping is driving robust order growth, particularly in Europe. Lazada's operational enhancements in Southeast Asia, including Indonesia, the Philippines, and Thailand, are reducing losses and boosting competitiveness. Despite a full-year 2025 7% year-over-year revenue decline, Alibaba.com's B2B platform remains a promising long-term opportunity for cross-border trade, especially for SMEs. AIDC's trajectory suggests strong growth potential, with improving profitability and strategic expansions positioning Alibaba to capture global e-commerce opportunities, though trade policy risks persist. 3. Accelerating cloud adoption. Alibaba's Cloud Intelligence Group saw an 18% year-over-year revenue rise to RMB 30.12 billion, $4.15 billion, in Q4 2025, with AI-related products achieving triple-digit growth for the 7th consecutive quarter. Alibaba Cloud's dominance in AI infrastructure, strengthened by open-sourcing Qwen 2.5 VL and Qwen 2.5 Max models, has generated over 90,000 derivative models on Hugging Face, amplifying its global reach. Increasing demand for cloud-based AI services in industries like manufacturing and agriculture is broadening its customer base. CEO Eddie Wu underscored a significant growth track for future cloud revenue. Alibaba's RMB 380 billion investment in AI and cloud infrastructure over 3 years aims to challenge AWS and Microsoft Azure. Despite margin pressures from heightened spending and potential global trade risks, Alibaba Cloud is well positioned for sustained growth in the competitive AI and cloud market. Risks to consider. While Alibaba looks like a compelling stock, we should be mindful of potential risk. 1. Regulatory and political risks in China. Alibaba has faced significant regulatory scrutiny in China, including a $2.75 billion anti-monopoly fine in 2021. Continued government oversight and evolving policies pose ongoing risks to its operations and growth. The company's future performance heavily depends on how well it can adapt to and comply with China's changing regulatory environment, making regulatory and political risks a critical factor for investors to consider. 2. Geopolitical and trade tensions. U.S.-China trade tensions pose risks for Alibaba, as recent U.S. actions include removing tariff exemptions on some Chinese imports and calls to delist Chinese firms from U.S. exchanges over national security concerns. These disputes, centered on technology export controls and tariffs, could disrupt Alibaba's international business and affect its U.S.-listed ADR shares amid ongoing trade negotiations and geopolitical friction. 3. Fierce competition. Alibaba faces intense competition both domestically and internationally. In China, rivals like JD.com and Pinduoduo are gaining market share, while Alibaba's annual active consumer base is nearing saturation, limiting growth potential. Internationally, Alibaba competes with global e-commerce giants such as Amazon and other cloud service providers. To maintain its edge, Alibaba continues investing in technology and partnerships, but the competitive landscape remains challenging and dynamic. Conclusion. Alibaba Group presents a compelling case for investors seeking a blend of growth and attractive valuation. The company has demonstrated solid financial performance in Q4 2025, with notable increases in revenue and earnings per share, despite short-term pressure on free cash flow. Its stock has significantly outperformed the broader market over the past year, yet still trades at relatively low valuation multiples, offering meaningful upside based on analyst forecasts. While macroeconomic and regulatory risks remain, the company's fundamentals and strategic focus suggest that Baba stock remains a good investment opportunity for value-seeking investors. But remember, this is not a financial advice. What do you think about Alibaba? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.